Welcome to the Invest for More Real Estate Podcast. My name is Mark Ferguson, and I am your host. I'm a house flipper. I flip 10 to 15 houses a year. I own 13 rental properties with a goal to buy 100 by 2023. I'm also a real estate agent. I've been licensed since '01. I run a team of 9. We sell close to 200 houses a year. So on this show, we like to interview house flippers, landlords, and the best real estate agents in the business. So stay tuned for some great shows. If you want more information on my rentals, on the numbers, how I buy properties, check out InvestFourMore.com. Hello, everyone. It's Mark Ferguson with Invest for More. Welcome to another episode of the Invest for More Real Estate Podcast. I'm very excited this week. I have a great guest, Darrin Gross, who's a commercial property insurance broker. He's also an investor himself and even has his own podcast show. Darrin, I'm really happy to have you on the show. Thank you for joining us.
Hey, it's great to be here, Mark. Thanks for having me.
Yeah, no, I'm very excited because I have not talked about insurance on the podcast yet. And through my own personal experience, I know it can be difficult getting insurance on flips, even rental properties sometimes. And most traditional agents don't exactly know a lot about getting insurance on flips. They outsource those to other companies, and you don't always know what you're getting with those policies because they're not familiar with them. So I'm glad you're here to kind of set us straight and let us know what different products there are for flippers and how they can improve their business.
Yeah, we can certainly talk about that. We'll try and keep it interesting.
All right, sounds good. Very cool. Well, yeah, before we get too in depth on the insurance side, you are an investor yourself. You've been an agent, an insurance agent for quite a while. Tell me about your history, how you first got started in the real estate field.
Sure. So I got started in insurance back around 1990. And about 1993, I went to work for an independent insurance brokerage. And one of my first customers was a guy that I could swear he stayed up too late watching those TV shows. I'll show you how to buy a property with no money down. And he was calling me up just about every other week or so and telling me about a new property he had. And I'd go out and try and point my Polaroid camera in a way that would hide all of the issues that the house had, whether it be a tree growing through the chimney or broken windows or whatever, and take the picture so I could add the coverage with the insurance company. And a while went along, and I kept hearing his story, and he was telling me how he's making this much here and that much there and this much here, and I kept thinking, I got to get into this. This is crazy. This guy's making 100 here, 100 there, 100 there, 100 there every month. It adds up after a while. And along the way, I heard him say that he was looking at another property that he wanted. And what he needed was $10,000 to go do this other deal. And so that was kind of in the back of my mind. And we were standing at one of these properties, and I finally said, well, I got to do this. And he goes, well, you want to get in? I'll sell you this property right here. And this was a kind of an unconventional duplex. It was definitely rough. It was not anything pretty, but he was telling me the numbers and how it all worked. And he offered it to me. And I can't remember exactly, but I'll say it was $125,000. Again, remember, this is like 1994, maybe 95. And so anyway, I went home and I think it was a holiday weekend because I remember just like sitting at the coffee table, I had the yellow legal tab, and I was just, this is back before I even had any kind of a mortgage calculator. I had like the little rate book that you got from the title company that had all the, if you're charging this much, this is the factor, multiply it by to get your payment, all that fun stuff. So I'm running my calculator, my yellow tablet, I'm going on and on and on. I can't make the numbers work, and finally it dawned on me that what he wanted and what he needed was $10,000. And I had a line of credit that I hadn't used that had that much and more available to me. So I kind of backed into it. I thought, well, shoot, if I give him this much down, the $10,000 that he needs, and I offer him a price, and I want to say I offered him like $90,000 or, thereabouts. The numbers worked. And so I offered it to him, and he goes, yeah, sure, let's do it. So I gave him my $10,000, not my $10,000. I gave him the $10,000 for my line of credit. He took carried the note on the property, and I became a landlord. And I was scared to death. Like I said, it was a rough property. I was racing to the bank every month to pay the payment against the line of credit and to pay him. And I learned about how a management company, they got paid first. And it just was like a very educational time in my life. And that was how I started. And just to kind of give you the full wrap up on that thing, 7 months later, a contractor customer of mine who wanted to get into investments, I told him about this property I had, and I offered it to him at, again, like, I don't know, I think 125,000 or whatever, or maybe made it 135. I don't remember. But he goes, damn, let me buy it. So I called up the seller I'd bought it from. He agreed to carry the paper for this guy as a second, because we found a lender that would pay off the first. And so I think in a matter of 7 months, I made like, I don't know, it was like $25,000, which to me was just like, are you kidding me? And I was hooked and been investing ever since.
That's a pretty good success story for your first deal. that doesn't happen too often. So, and it sounds like you learned a lot on the fly, really, without knowing a whole lot about what you're doing at that time, which many times is the best way to learn, if you ask me. But
well, I refer to it as I was baptized by fire.
Right.
And got plenty more stories with other properties as well. But that was my first one.
Very cool. So how did your investing progress? Did you keep buying rental properties? Did you do some flips at all? How did you keep staying in the business?
Sure. So I've always had kind of more of a long-term view. I've always looked at this as kind of my pension plan, kind of retirement plan. So my wife and I, our goal has always been to acquire and hold and, get them paid off as quickly as possible, which we're reevaluating now. We're looking at possibly leveraging up and getting into some bigger properties. But we sold that first one, and I didn't even think to do a 1031 exchange at the time, which past is the past, can't go back and change it now. But shortly thereafter, had another opportunity presented to me. And it's kind of like one of those things like where if you drive a red car, you notice everybody else driving a red car kind of thing. And I was, I was hooked on the whole rental investment or, investment property conversation and just the whole mindset. And, I was talking to another friend who had an option on a property that he wasn't able to exercise. And the option came up. I stepped in and took that one over. Still have that property, slowly but surely. We've acquired some additional properties. We try to think some of, I've paid full retail on some of them, which was just a horrible mistake. At first, time has fixed that. The rents continue to increase and the property's appreciated. But we started out with the one. We added 3 more in an area that was kind of close to each other. In fact, one of those was a house we used to live in. We converted into a rental. I've added a couple more. And I think the thing that I've learned that was really a game changer for me was the learning the numbers up front and knowing exactly my cost and exactly what the rents were going to be and exactly if I was going to make money or not on the back end. Or, and I mean, now we have cash flowing properties, cash in the bank. We're waiting to make our next move, and it's very rewarding. And that's not the way it was in the beginning. The beginning was buying things and bleeding, up front and just thinking I was going to make it up on volume or over time. And it did over time. It did work out, but it was not the way that we do it now. We make certain we are cash positive from day one.
Right. No, that makes sense. And I really preach that a lot on my blog is it's not as easy as many people think to buy a property that doesn't cash flow. Usually your expenses are higher, your vacancies are more, and you don't realize how much money is going to be sunk into it. And it's not a lot of fun writing a check every month for a property that's supposed to make you money. So yeah, cash flow is definitely the way to go.
Yeah, it's like I said, it's a game changer. It's probably been coming up on 10 years since we've been seen the light and had just absolutely positive cash flowing properties. And it's a life changer. I mean, when you have properties you have to pay every month to keep, you start to wonder, why the hell am I doing this? As opposed to properties that are paying every month and you're seeing significantly positive deposits in your account every month, it's night and day. And anybody I talk to, there's a tool I came across, and I'm happy to pass along, and to your listeners, I'd be happy to pass along as well. But it's basically a 4-page spreadsheet that does everything from your source of funding, the use of funds, your expenses, your incomes. Has a mortgage calculator, so you can tell what it would be if you went with a lower rate, or if you can afford a higher rate. And it's magical when you have the numbers and you can actually make money from day one.
Yeah, no, it's a great feeling. And yeah, I will definitely include that in my write-up for this podcast, so listeners can get a hold of that. It sounds like when you were an agent, you were around a lot of investors. I'm sure that helped you as far as networking and knowing people in the business. Was that a big positive when you first started out?
Yeah, it was. Again, I think if you're attracted to this kind of thing, and I was, I networked with a lot of mortgage brokers, and that led to a lot of investors, and then continued to progress. I've found people that were able to attract money. I've got some customers that have been customers for 20 plus years that have figured out how to make money in any market with respects to real estate. And it's shown me that real estate is, the game may change because whether the market collapses or interest rates change or whatever, but the fact remains there's always an opportunity. You may just have to change and tack and change course a little bit, but there's an opportunity.
Yeah, for sure. I completely agree. And I've been flipping houses with my father and then with myself later on since 2001. So we've been through some different markets, and it's all about buying right. If you can get a property cheap enough, you can make money on it in any market. And I'm a strong believer in that. So it sounds like you start out as kind of a traditional insurance agent, but over the years, you've kind of morphed into more of an agent that specializes in investment properties and working with investors. Is that right?
Absolutely. Yeah, that's kind of, what I identified with was what I was passionate about, and that was real estate. I feel like, when I talk with an investor, I know where they're coming from. I know what their expectations are. And I learn a lot. I've learned a lot about how to go about doing my own investing and stuff. And I've always looked at the investor's lifestyle as one that I wanted, from a standpoint of a guy that's not grinding against the clock kind of thing, because he's, working for the man or however you want to say it, but he's got a remarkable amount of freedom. I've got, customers that they vacation for months at a time down in some southern zip code where the sun shines and the temperature is 85 degrees, and that's always been appealing to me. So yeah, I've gravitated towards that, and I've made it my focus to work with anybody dealing from real estate. I always kind of draw a line from, left to right, from lenders and primarily hard money lenders would be kind of a niche that I work with. I deal with some developers, people that are developing properties, whether it be, commercial or subdivision kind of thing. Also work with your investors that are doing, whether it be landlord or the flips, but that's kind of the line I try and play on.
No, very nice. I'm curious, being from both sides of it, as a traditional agent in the beginning, I don't know exactly, what kind of policies you wrote, but most agents are writing many different policies for houses, cars, properties. What challenges were there working with real estate investors, whether it's rental properties or flips? Because I know I've had a lot of challenges myself working with insurance companies, because it's not an easy property to insure.
Sure. I think that most agents start off and the companies kind of, don't really provide a lot of training. It's kind of like, go talk to all the people you know. And so you start with your immediate circle, which is your family, might branch out to your friends, your church, your country club, whatever your network is. Okay. And consequently, most of those people have at least a car. They might be renting if you're starting out young. If they own a house, then that's when they need insurance more for, property. So that's kind of where everybody kind of starts. And I think I always refer to it as kind of hunting with a vacuum cleaner, because you don't really have a focus other than the fact you need you need more business, right? And you'll end up with a bunch of oddball stuff. You got a guy that has a taxidermist, an astronaut, a witch doctor, and none of these things have anything in common, right? And you can't find more of those. So you're just literally you might do a bowling alley one day, you might do a rental policy one day, a renter policy, you might do a moped policy, and it's just it works, and a lot of people have made very, very long storied careers out of doing that. What I recognized, and I came from a much higher premium concentration market. When I first got into insurance, I was working for a company that all we did was auto dealerships. So your Ford, Chevy, Toyota dealerships, and it was premiums for those things were, I think the smallest one I ever sold was like $20,000 a year. It was not uncommon to sell something north of $100 plus $1,000 a year. And when I came into the independent agent side, I was looking at things that were like $250 a year. I was kind of, holy moly, how am I going to make this work? And the thing is you start out and you just kind of grind, and you just know that you got to do sales. Home and auto are easy. The companies want it. It's good business for the insurance companies. It's stuff that usually sticks around for a while. But for me, I just I do it, and I have customers that I've had for a long, long time, but it's not been my focus. As an independent agent, I think the percentage, and it's been a little while since I've looked at this, but I know it's north of 80% of all business insurance is placed through independent agents. So I looked at this as, hey, the strengths of where I'm at are working with businesses. The business that I'm attracted to is real estate oriented business. Let's do that.
Right. No, that makes sense. And so as you've developed into a real estate insurance agent, how have you changed your business to work with the flippers, with the landlords? Because it is kind of a rare niche to find agents who are familiar with that side of the business.
Well, I think what you're talking about right now is just marketing, and it's a process. I mean, one thing that I realize now is that marketing is a skill that's not widely understood. Again, if you start off and they tell you just go talk to everybody, that's not exactly marketing. That's, here's my card, I'll call you. What I've tried to do, and I think the internet's changed the game considerably. I mean, the fact we're doing a podcast, I wouldn't have thought to do this 10 years ago. But I guess the point is to, I recognize there's a need for this. I've continued to talk to people that have that need. I've provided solution for those people that have that need. And it's kind of grown just on more of a networking from those people. They referred me on and on and on and on and on. And it's like I said, recently is when I've really started trying to market myself as that person that does this, even though I was doing it all along. I mean, I was doing a lot of cold calling. I'd find people, I'd be able to find out that who it was that owned a particular property and call out to them. And most people, insurance is not a sexy topic. I mean, the fact that we're talking about it is, okay, I'm excited to be here, but it's usually like the last thing people are wanting to talk about. Investors, they want to talk about the deal. They want to talk about the money they're going to make. They want to talk about the next deal. That's what gets them excited. The insurance is something they have to have if they're borrowing money. Okay. It's not until somebody actually starts to accumulate some assets that they get concerned about losing those assets. And that's a much more inviting conversation about insurance than it's something I have to have. And, clearly customers of mine that have acquired a portfolio of properties, their concerns are dramatically different than the guy that's, got a home or an auto or is doing his first flip.
Right. No, that makes sense. So for a landlord, who owns, like myself, I've got 16 rental properties now. What should their major concern be with insurance? I mean, is it smart to use your local insurance agent who handles all your other business when you've got rental properties? What are the differences between a rental property policy and, a regular personal residence property that you live in?
Sure. So, well, on a personal policy, it's going to give you the structure, your contents, which a rental policy doesn't include. It's going to give you personal liability for both at your home and away from your home. Your auto policies, obviously, it's going to follow the auto. The landlord situation is not dramatically different from a homeowner policy. I mean, it's the operations at the home are essentially the same. Somebody's living there. There's going to be some minor coming and going of guests and or people to do repairs, so that the exposure is relatively the same. And that's why it's an easy transition for somebody that has a home and auto to call their agent and say, hey, I bought a rental house. Okay. And most companies that do home and auto insurance will do, anywhere from 4 to, I think some companies will do up to 10 single family rental homes for you. It's usually once you kind of breach there's some sort of a water line where the insurance companies start to look at it like, hey, wait a minute. This is more than a passive thing. This is a business. Okay. And maybe you start owning your properties in an LLC as opposed to owning them as just you, Mark, as an individual. Okay. And at that point, that's when a commercial policy is usually a better solution. It's what I found. You can get some economies of scale. You can get higher limits. You can provide some additional levels of protection opposed to just having that one policy for that one house. The other thing too is it becomes a nightmare. I don't know if you've probably noticed this, but insurance billing is one of the least detailed things that anybody has ever put together. I mean, when you open your mail and you get a bill from the insurance company, I mean, I even have to look at it and try and think like, what the heck, what is this for? And it's just not very detail oriented. If you have a schedule of properties and you have an LLC that you're operating, you can have one anniversary date for that property. What we provide for all of our investor clients is a breakdown telling how much of that premium is associated with each property. So when you go to do your taxes, you can allot for the premium breakdown for each property. But it's a much more, kind of a business way to do things than have, like you said, 16 properties and 16 policies. I mean, life's kind of short. It's much easier and much more manageable to do on a larger scale through a single commercial policy.
Very cool. Yeah, I do have 16 different policies on my properties right now. So I may be talking to you later after the show to figure that out. And the biggest challenge I have is with flipping. So I know many traditional agents, they won't even insure a flip. They're just like, no, we don't do that. And then the few I've found who do it kind of outsource it to other companies who specialize in that. So what are the tricks with getting insurance on flips, and why are insurance companies so hesitant to insure them?
Sure. I think, one of the things that you have to kind of understand about insurance is it's a contract, right? And you can interpret a contract, right? I mean, that's what lawsuits are usually about, is an interpretation disagreement kind of thing. And if you start with, what is your intent? Okay. If you're buying a property, put in a rental, going the traditional route of a landlord policy is a perfectly good way. Even if you have to do a little bit of work on it, most companies will allow for a little bit of, you're going to put some paint and some floor coverings in and maybe do some minor sprucing up so you can get some higher rents, right? Because even at a flip, when you have a vacancy, you probably got to go in and paint and patch and carpets and what have you, right? But the difference is it all comes down to, what is your intent? And the insurance company underwriter, it's their job to make sure they're not putting something or putting some coverage onto a risk that they don't intend to. Okay. And the reason why that, I don't want to get too deep on insurance talk, but actuarially, their rates for a rental property are reflective of a rental exposure. They don't anticipate you going in and monkeying with the envelope of the building, doing additions, a long vacancy because you've got a lot of work to do, all of the contracting construction work you may need to do with a flip. Okay. So that's kind of the line is, again, I start with, what's your intent? Okay. And if we all agree that the flip is something you're looking to make a fast, or, you're looking to make some money and you're hoping to do it fast. Okay. and you're not going to be putting a renter in there, and you're going to be selling the property. The insurance company does not want that on a landlord policy. So what we do is we navigate that path with our customers. And most flippers that I'm aware of have run into the builder's risk policy. Okay. The builder's risk policy is what covers the structure. There's no liability attached to this. It's strictly the structure, and it'll cover the additions or the updates you're going to do. So if let's say you bought a property, distressed property, you bought it for 100, you're going to just use easy math, you're going to put 50 into it, and you're going to sell it for 200. And hopefully in 120 to 180 days, you're going to be able to sell that. So you're going to make your money, $40,000 to $50,000 after you sell the thing. From again, the 100, and that $100,000 includes the land. So whatever we decide the structure is worth, plus whatever you're doing for the additions, there's a value that represents that you would be out if you had a loss. Okay. The builder's risk policy covers all that from the beginning value to the end value. And it has a function that recognizes the percentage of those improvements you've put into it. And it'll cover even materials. It has a possibility, I should say, to cover materials that you've purchased that have not yet been delivered. It's just a much more appropriate coverage policy for the structure risk. Now, one of the things that I think a lot of flipping investors don't recognize in the beginning is their liability. And I'm curious. I mean, you do flips. Tell me what your experience has been with your insurance.
To be honest, I don't know exactly what my coverage is, so I didn't realize that. As far as liability goes, I do have experience with a property where we had the copper stolen out of it recently because it was a vacant house, and we called up the insurance company and they said, "Oh, we don't cover theft in your policy." I had no idea that wasn't covered. They just cover vandalism or other losses, but they don't cover theft. So that was my recent experience. But luckily, I've had no liability issues come up where someone got hurt or something happened to the property up to this point.
Right. Well, and that's a huge exposure there. When you deal with the vacancy issue, a property that's vacant for more than 60 days loses all sorts of coverage. Okay. Especially like on a landlord policy. So they recognize that a vacant property is an attractive nuisance, like you described, somebody coming in and ripping out all the copper. And so that's why, again, that, even if you had just a regular landlord policy and it was vacant for 60 days, chances are that theft of building, because once the copper has been installed, it's considered part of the building, is not going to be covered, or your coverage would be reduced based on just the standard policy. But kind of continuing on this conversation, so we have the structure when you buy it. You maybe, if you're borrowing some hard money, you need to provide proof to the lender that you've got coverage. But that's where a lot of people's mindset kind of stops, is that, oh, okay, yeah, I got to provide that proof of coverage to the lender so we can get this work done. The liability issue is one that I try and make sure all of my customers understand, because the last thing I want to do is have the phone call and, hey, Mark, how you doing? Oh God, we got, got a lawsuit. Somebody tripped and fell, and we got, you did what? That's not a good conversation. So as a professional that's focused on working with investors, I make certain that they understand the risk. And one of the first things that I try and educate all my customers on is to make sure, if you are working with licensed and insured contractors, that you have some sort of a contract that requires them to provide you, at the very least, proof that they have insurance. Okay. And ideally you get an additional insured endorsement, which basically says that anything that they do that causes you a problem and you get sued because of their actions, their policy will defend you. It'll take care of the problem they cause. Okay. So, that's like the starting point. Make certain you are getting proof of coverage, and ideally you're named as an additional insured by the contractors you're working with. Now, in flips, a lot of times I know that people are working with maybe handyman guys or maybe some casual labor, or it's how do you keep the expenses as low as possible, right? But if you're working with in volume, and I've got customers that do upwards of 50 flips a month, okay? If you're dealing any kind of volume, you need to make sure you have policies and procedures in place and operate like a business. Rather than exposing all of that, the assets that you're accumulating and all that, you're creating a lot of exposure the more volume you do. So the first thing I do is I always encourage people to understand, and if they don't have a contract, get a contract with the contractors they're working with, and and then also make sure they're getting the certificates and are listed as an additional insured. The next thing that I always like to make people aware of is, at the very least, make certain you have some sort of a premise liability, again, for the trip and fall stuff. This is not a very costly thing. It's something that would cover you should anybody trip or fall or get hurt at the property. Okay. Same as like a landlord policy. If somebody gets hurt on your property and you get sued, you would be better off to have a liability policy, an insurance company standing behind you, rather than having to face a judge and say, well, that's all I got. They take your cash, they take your equity in your home, they take your, all that they can, and you're left with basically, now you're the renter kind of situation. So that's kind of a next step that I encourage people to, at least as a bare minimum, protect yourself, get a premise liability. The best solution that I recommend my customers, and again, I can't say that everybody follows it, because I think a lot of people kind of weigh their risk and decide, well, I feel I'm okay. But if you're doing anything with the envelope of the building, if you're having roofs put on, you're putting new windows in, you're putting new siding in or on, maybe you're doing some bump outs, some expansions or whatever, you're changing the configuration of the building, I highly, highly, highly recommend that you have a full commercial general liability policy that includes your products and completed operations. Because the last thing you want is that house you just sold, you sold it in the summertime, the fall comes, the rains come, and the roof is leaking into the house. It's damaging all the drywall, and you've got somebody screaming at you and suing you, right? This is a true story. I had a customer here recently who hired a subcontractor who he got the certificate of insurance from, and the guy had, limits that would look to be adequate. Turns out the subcontractor's policy excluded roofing. And here this is what he's marketing himself to do. This is what we hired him to do. He did it. We paid him. We got a certificate. We were listed as an additional insured, and lo and behold, his policy excluded roofing. Well, fortunately, my customer had a commercial general liability policy that covered him for the acts of people he hired. And that is the real world of real estate investing and flipping.
No, great information. One thing I've run into when I have my flip policies is I notice they're very expensive. So I'm curious what your take is on, say comparing the same property as a rental property versus a flip property that would, cover most of the things you talked about. What are the price differences that you see as an agent between the two policies?
They can be double, but there's a couple ways you can mitigate that. When you're doing your flips and you're seeing these price increases, and let me ask you, does that sound about right for the cost comparison? Is it double?
No, I'd say it's more. I would say it's probably triple, sometimes even a little more than that on some of my flips I'm doing.
Okay. Well, and keep in mind, regionally, depending on where you're located, the rates are going to vary. I know I've got customers that do stuff down in some of the Gulf wind states. That's a whole different animal. Out here in the Pacific Northwest, where rain is kind of our biggest issue, I'd say double is probably a multiple I'd be comfortable with. But if you're in, more hazard zones where, wind and hail, et cetera, it could be substantially more. But lost my train of thought there. We're talking about
the cost of, flipping versus a rental property policy.
right. Are you buying an annual policy or are you buying a short-term policy?
I believe it's a short-term policy that's renewed. It's either every 6 months, I think. Maybe it's even less than that.
What's the average time that it takes you to do a flip, Mark?
I don't like to talk about that. It makes me mad. No, okay. That's something.
Well,
that's something I've been working on. But between 6 and 8 months has been what it's been taking us. But we're working on reducing that time.
Okay. Well, and I think your experience is what I find is that people usually have, it's kind of the eyes are bigger than the plate kind of a thing, or they can do it faster. I've had customers that'll say, "Oh, we're going to have it done in 120 days, guaranteed." And I'm sorry, are you sure? Because I can sell you an annual policy that will upfront cost you more, but it'll be in place for the full year. And if it takes you that 6, 8, 9, 10 months to get the property sold, you're done. You don't have to renew your policy. Okay. If you buy a 3 or 4 month policy and you get to the end of that and you're not done, that second policy is going to cost you again, comparable to what you paid for the first one. And if you need more than that, the underwriter's starting to think, does this guy know what he's doing? All right. So I encourage people that, if you don't have your timeline set, and you don't have your contractor selected, and you don't have your processes figured out just yet, buy the annual policy. Okay. Because it's money up front. It's expensive, but you won't be calling me and be upset that you've got to extend the policy and creating a possible solution. For my customers that have it really figured out, that have they acquire the property, they've got the crews out there the next day, they're in their demo mode, they're in their build back mode, and they're on their way, and in 90 to 120 days it's going to be sold. I found a really slick program, and it's an excellent alternative for, like I say, I call them high speed flip operations or even hard money lenders, in that it's a web portal to where you can log in 24/7 and you can add a property, just put in the address, put in the value you want to cover it for. You can add liability if you need it for premise liability. I want to be very clear about that, not your products and completed operations, but for the trip and fall kind of thing. And your expense is prorated for as long as you have it. So if you're able to get in and do it for 90 days, you're only going to pay, a quarter of an annual premium. All right. The rates are a little bit higher when you compare this program to like an annual program, but because you're able to do a quick flip, you can control your cost and keep them under control. And it's been a great solution. I've got a number of customers that are on it, and they continue to refer me customers based on how well it works. So if you have, I guess where I'm going with this is, if you have your systems figured out and that step 1, 2, 3, let's get this thing sold, and you're able to get in and out of them 90 to 120 days, it's a really good solution.
Very cool. No, that's really interesting stuff. And I'm definitely going to be talking to you after this podcast about my properties too, because it's tough to get different policies. And with some of the agents I've been dealing with, there's some properties like we won't even insure that because of the condition it's in. Do you run into that too, where you have problems insuring properties because they're in such bad condition, or do your policies account for that?
Typically not. I mean, I've had some pretty rough properties over the years. I would say if you're trying to go through a traditional landlord policy, that would not be, out of the norm that you might have somebody reject a property. But, I mean, a builder's risk policy, just for starting, I mean, heck, it's the same policy they use for building brand new homes. When you start off with just a bare lot and you're going to have a completed home within, 6 months.
Okay.
So.
Okay, good to know. And then on the rental property side, I've noticed my policies, the insurance company really wants to make sure they're in good condition before they will, insure those properties. So do you see that same thing as well with those commercial policies where, they need to see pictures of the roof of all the systems, or are they more lenient on those policies too?
Well, your traditional companies are investing a lot more money in their field underwriting. I think is probably universal. I think companies have recognized that they've taken on some risk that they wouldn't because they haven't put the money into inspecting their what it is they're insuring. So yeah, we are finding that insurance companies are getting out and I think typically it's 30 to 60 days that they have to tell you, hey, we're off this. This is not acceptable. But again, if you're starting with a more of a commercial policy, I mean, if you're a landlord and you're buying properties and you're keeping them and you've established a relationship with the carrier and it's understood how you operate, I find that most carriers are able to give some leeway to understand that within X number of weeks you'll have the property up to speed as you have in these other that you already currently own. But yeah, I guess to answer your question, definitely they're spending on in inspecting properties. And if you're trying to go through a landlord type policy and you're trying to insure rough stuff, you're probably going to get turned away. Okay.
No, good information. No, I've learned a lot. So, so as far as somebody who's currently investing, they've got some rental properties, maybe they're doing a few flips. What's your advice? I mean, should they talk to you, contact you, just have you look at their situation, see if you can help them out, and make sure they're properly insured?
Well, I welcome anybody to that wants to reach out to me. I'm happy to talk, and if it makes sense, do everything we can to help them. If somebody's just got a one or two properties kind of thing, I would encourage them to stay with a relationship they've got in place. If you've got a home and auto agent that you work with and you're buying a rental property, I certainly wouldn't go to any great lengths. I would call that person first. If you don't like what you're hearing, then by all means, give me a call. But I'm not a big fan of, or I guess I should say this way, I'm a big fan of a relationship. So that's where I would first start. But what happens, and this is where I think that I'm a good fit for this, is that a lot of people outgrow that. Okay. Once you go past 4 rentals, maybe 10 rentals, you need more of a commercial, solution, commercial insurance solution. And that's where I feel like I'm able to help customers most. Likewise with flips, if you're doing one with your brother-in-law and you're going to take 6 months to a year to do it, and it's a house that was next door to his house or his Aunt Mabel's house that you guys took over, you can probably handle that with your local agent. But if you're serious about doing volume flips and you're struggling to find somebody that knows what they're talking about, I can help you there. And I wouldn't turn away anybody else in, like the Aunt Mabel situation. I certainly welcome the opportunity, but again, I'm going to encourage you to reach out to your local agent that you currently work with and have a relationship with first.
No, that makes perfect sense. And I completely agree. Whether it's insurance, lending, real estate agents, relationships are so important in this business. Very cool. Very cool. Well, I think those are all the questions I had for you. Do you have anything else you want to add before we sign off here?
Just 2 things that come to mind here quick. I just want to make another plug there for, or not a plug, but just point. If there are any hard money lenders out there that are concerned about how their portfolio is exposed with, the flips they're lending on and stuff, that high speed solution I mentioned, where you can log on 24/7, it's really slick, and it's a great way to protect your portfolio and your investors. And the other thing that came to mind, I mentioned to you, and please let your people know, and I'll send you the link. But there's a link I prepared that has basically what we've talked about, how to contain your risk and the difference between a landlord exposure and a flipping exposure, kind of spell out, the different levels of coverage. And I also, I've got a sample contract and some sample certificates that you can look at. So when you do request these certificates from your contractors, you'll know what you're looking at. So there you go.
Okay, great. And what's the best way to get a hold of you? I will post a link to that on my website and links to get a hold of you as well. But if someone wants to talk to you, is it email, going to your website? How should they get in touch with you?
Yeah, probably the best way right off the bat is just email Darrin, Darrin, at the letter J, Darrin, Darrin, Gross, Gross.com. My cell phone, I've got that on 24/7, 503-504-7619.
Wow, you're the first person who's given their cell phone out on my podcast. So hopefully that doesn't backfire.
All right. Well, yeah, maybe. Maybe I'll have to change my number.
Right. Very cool. Awesome. Well, hey, Darrin, I really appreciate you being on the show. Great information. I was taking notes the entire time to make sure my policies are in check. And I think I could definitely improve some things I'm doing as well, insurance-wise. So I really appreciate it. Great to hear your story and how you're helping people out. And yeah, I hope you have a great rest of the week.
All right, Mark. Thanks.
All right. Talk to you soon.